Welcome to Trade Pro. In this video, I'm breaking down my personal trading strategy step by step using examples of trades that I actually took in real time and called live on my Patreon page. I think it's so important to use examples that I actually took because anyone can go look at past price data on a chart and say, hey, I would have done this, but it doesn't really mean much because literally anyone can do that. That's why I want to use examples where I actually took the trades in real life. And, I'm not just saying, hey, I would have done this. This is what I actually did do. Okay. So I'm going to use a couple examples, one on Euro against the US dollar and one on Bitcoin, both ones that I called in real time on my Patreon page. And, I really traded them. I think it's so important that using examples that were actually traded in real time, because how can you know what you'd actually do in real time if you're just looking at past price data? All right, so let's get into this. This trade started out with a post where I said, here are some live hidden divergence examples. And one of them was an hourly time frame, Euro against the US dollar, and it was hidden bearish divergence. Price was under the 200 EMA on the hourly time frame. So here is the actual post, live, real time. And I then followed up that with breaking down my entry on that trade, the moving of the stop loss to break even as the trade played out. And then after the trade had completed, I did a full breakdown step by step, just recapping everything. So let's go through that recap step by step here and talk about each of the steps to my strategy. So the first step with my strategy is starting out on your higher time frame chart where you're going to identify the main trend direction as determined by the 200 period exponential moving average. All right. So for this trade, I was on the hourly time frame. Price was under the 200 EMA. So I'm only looking for a short position. If price was over the 200 EMA, I would only be looking for a long position. In the next trade example I show on Bitcoin, it will be for a long entry. So you're going to get an example on Euro against the US dollar here on this example for a short, and then I'll show the Bitcoin long trade after. All right. So first, identified the trend direction. Price is under the 200 EMA on the hourly time frame. That's my higher time frame chart. My anchor chart is what I kind of like to call it. And next, I need to spot hidden divergence. And what that means is price is going to put in a lower high. So if you look here compared to here where I've drawn this purple line, it's a lower high on price, but at the same time, there's a higher high on the RSI. As I drew in with the purple line, RSI makes higher high, price makes lower high. That is hidden bearish divergence. So for a short, the step number 2 is finding that hidden bearish divergence on your anchor chart or higher time frame chart. So now you've got the hidden bearish divergence and the main trend direction. Okay, so let's go to the next step. The next thing to do is find regular bearish divergence. Okay, so this is actually going to be done usually on a much lower time frame than your anchor chart. Okay, so this one is being shown on the 10-minute time frame where there's regular bearish divergence. So if we take a look here, there's a higher high on price right here where this purple line is drawn. Price makes a higher high, but the RSI makes a lower high. So, there were a few along the way here of regular bearish divergences, but you need to have at least one regular bearish divergence on the lower time frame chart. If we go back over here, there was actually even a regular bearish divergence on the hourly time frame. If you compare this peak here to this peak here, it makes a higher high on the hourly time frame, but the RSI makes a lower high if you compare this peak to this peak. So there's regular bearish divergence not only on the hourly time frame, but there's regular bearish divergence also on the 10-minute time frame as well. So that is the next step of my strategy, is identifying regular bearish divergence Normally it's going to be on a lower time frame. Typically, if you're trading on the hourly time frame as your higher time frame anchor chart, you're going to be looking at the 30-minute, 15-minute, 10-minute, 5-minute charts to find that regular bearish divergence. So now you have a few things on your side. You have the main trend direction under the 200 EMA. You have the hidden bearish divergence on the hourly time frame. And you have regular bearish divergence on a lower time frame, all pointing in the direction of down. So you have all these things on your side signaling that the trend is down, price is going to move farther down. Okay, so you're looking for a short, but you can't enter yet. Let's go to the next step. And this is part of the entry process. Okay, so next, after you've identified those things, you need to wait for a market structure break. So what that means is price breaks market structure. And what market structure is, in my eyes, is the formation of lows, higher highs, and higher lows. So I kind of drew it in here on this breakdown where you can see there's a low, there's a higher high, a higher low, higher high, higher low, higher high, higher low, higher high again, and finally, price fails to make a higher low. That is the market structure break. So see where I drew this purple line in? This is the previous higher low. We get the higher high, but then we get the break of the higher low. All the way until this point, price kept making higher lows and higher highs, and then it failed to make a higher low or a higher high. So this is what we're looking for. This is a sign of bearish pressure. You know, the bulls are failing to produce a higher low. Okay. So we get the break and the failure to form the higher low here. Let's go to the next step. Now this is the actual entry part where you're going to enter this short position on the first pullback after the market structure break. All right. So this was where the break occurred on this big red candle here. It broke that higher low. And then you can start looking for your short entry now. Once that higher low is broken, the market structure breaks, you can look for your entry. And I like to do a 50% entry based on this part of the strategy. And that is going to be a bearish candle. So I'm looking for engulfing. I'm looking for a long wicked candle. Shooting star is what a lot of people would call it. But you get that right here. See this long wicked red shooting star. You get also this big red engulfing right here. And you can do this on the hourly time frame. You can do this on the 15, whatever. But you're looking for bearish indications in candlestick patterns after the market structure break. Okay. And that is going to be 50% of the trade entry on this first pullback after the market structure break. Now this is where you need to know where your stop loss and take profit target are going to be placed. Stop loss for this example was placed just above the swing high up here. And this is the swing high of the entire pullback. So if we go back a couple steps and look at the zoomed out chart, stop loss was above this high right here. All right, so this entire pullback, stop loss just above it. Let's go back to where we were at and targeting 2 times the risk. All right, so that was the trade setup. Now, if you were doing a 50% entry here, you can do it where you enter your entire position here. But if you're doing a 50% entry, the next 50% of the trade will be entered on the next stochastic cross in your favor. Okay, so I do use a 2-stage entry because it gives me a nice average entry, but let's just go and take a look at this. So here's the market structure break. Here's the entry on this candle. And then the next cross in your favor is on this green candle on the stochastic. So if you're me, 50% on this candle, 50% on this candle for the entry. Stop loss stays in the same place, still targeting the same target, 2 times risk. All right. So let's go back to this example here. And now this is important as well. This is the moving of the stop loss to break even. And I have an interesting way of doing this that I haven't seen anyone else do. So the stop loss is going to be moved to break even after price moves in the trade's favor, consolidates, and then breaks out of the consolidation again in the trade's favor. So here was the entry over here, and then price moved in the trade's favor, had this large consolidation, and then broke out of that consolidation. See where this purple line is? Broke out of there in the trade's favor again. And that is the point right here where it broke that purple line, where the stop loss moves from the swing high of the pullback to break even. And you continue targeting 2 times the risk, or at least that's what I do. You know, you can modify this strategy however you like, but I'm just telling you how I do it, okay? And that is it. You know, the trade was a winner. So that's the full breakdown of that euro against the US dollar trade on the hourly time frame, and one, you know, a trade that I really took and broke down in real time on the Patreon page. You know, you can see these step-by-step posts as the trade actually happens in real time. So I'm calling it as it happens in real time. This is not looking back at price data and saying I would have done this. You know, as you can see, here's the stop loss to break even part, calling it in real time on the Patreon page. So this is what I really did. So you have my assurance that this is actually how I trade. I'm not just, you know, saying I would have done this by looking at a bunch of price data. And hopefully you guys, you know, can pick up on this with other YouTube channels and Twitter accounts and, you know, just people in the trading industry where they say that you would have done this, or they look at a bunch of past price data and say this is what you would have done, but they don't actually have any proof that it happened in real time or that they would have done that in real life. You know, anyone can say that they would have done something, and it's easy to say that when you can see the future price data, but that's why I'm using examples where I actually took the trade and broke it down in real time for you guys, because I think it's a lot more helpful for you to see that I actually did do this. So now let's break down the Bitcoin trade. So let's see. Okay, this was actually another trade that I took that was stopped out at break even on Bitcoin. Here's a long that was a winner on Bitcoin. So this one here, I called out on the Patreon and I said Bitcoin has hidden bullish divergence again. Okay, so another example of Bitcoin with hidden bullish divergence on the 1 hour time frame. And I said, you know, this means there's a higher chance Bitcoin makes a higher low right here. So this was the trade setup. As you can see, hourly time frame, price is over the 200 EMA, so I'm only looking for longs. Then we have the hidden bullish divergence. So instead of being hidden bearish divergence like in the last example, this one's hidden bullish divergence. So we get the higher low on price, but at the same time, RSI is making a much lower low, okay? Now, let's go through the breakdown here. So you can see I really did take this trade, $746 realized profit on it. And let me see. So was this? All right. So this was just the hourly time frame. Got the hidden bullish divergence. So you can see, once again, this is the Bitcoin setup. So here is the next step after identifying that 200 EMA main trend direction on the hourly time frame, and then having that hidden bullish divergence. So we have 2 bullish factors on our side with my strategy, and now we find the regular bullish divergence, and that came here on the 5-minute time frame. So you can see price is making lower lows, but RSI makes higher lows. Okay, so we get the regular bullish divergence right here on this pullback. And this is just zoomed in on the 5-minute time frame. That is this right here. Okay, so just for some perspective, if anyone's confused, this pullback here, right at this peak, point down here, is this. Okay, it's the same price action down here. But this is the 5-minute chart, so you can see more detail and find that regular bullish divergence. Then there's the market structure break. So this time, right here, we get low, lower low, lower high, and lower low. But then it fails to make a lower high. All right here is where the market structures break, at this purple line. We get the pullback after the market structure break. We get the bullish candles here. We get the bullish candle here, long wick candle, whatever you want to call it. We get the engulfing right here, straight through it after the first pullback. But we get some bullish candles, okay? We get the bullish candles after the market structure break for that first 50% entry. So that's what I posted here, 50% entry. And I circled this area because this was where the market structure break happened at this purple line. And then we get the engulfing here. We get the bullish candles. So, bunch of opportunities to get that 50% entry, all right, for that buy position. Then this is the second half of the position on the stochastic cross up, okay? So the second half of the position would be entered right here. This is now back on the hourly time frame. This next stochastic cross in the trade's favor after the first entry, okay? And that happens right here. So you can see purple line going up. Now full position, and here is the risk reward ratio. So let's break down how this stop loss was decided and how is this one different? See how the stop loss isn't placed directly below this pullback, all right? But it's targeting 2 times risk. The stop loss is just placed a bit differently, all right? And let's actually go to that chart and talk about just where the stop loss was placed on that trade, okay? So here's the actual trade. This is what happened for this trade. All right, so the entry was right in here. And the reason why it wasn't placed just below the swing low here is because of how close the price is to the lows here. So I like to have my stop loss be far away from my entry so that I can still win the trade even if there's another push down, because often you'll get one last little push down that just kind of wicks out the lows, all right? So what I did was place it down below this wick over here, all right? And then targeting 2 times the risk, of course, all right? So you can look to a previous point of, I don't know what you want to call it, support or resistance. You can look to the previous low, the higher low in the main trend on the hourly time frame. But for this example, this is where I placed this stop, all right? And the reason for that was because this was too close, all right? A lot of the time, you're going to have those last little pushes down that just wick it out and then go in your favor. So this prevents that. And it maintained my risk reward ratio where my profit target still wasn't a ridiculously far point away. So, you don't want to do this where, your stop loss is way, way, way far away because it makes it unrealistic for your profit target to be hit. Okay. So to a new trader who doesn't understand about higher lows and good points of support and resistance and things along those lines, maybe just stick with using the low of the pullback that you're trading, just to keep it more objective. But I've been trading this strategy for a few years now, and this is what I have found to work. Okay, so I'm just telling you guys that's what I did in this scenario. Doesn't mean you have to do it that way. So for this one was moved to break even, where the stop loss was moved to break even once the highs were broken of this particular pullback. So let's go look at the chart. And so bring this guy back down here. So the highs that I'm talking about, where the stop loss was moved to break even, right up here. So once these areas got cleared, this is where the stop loss was moved to break even, okay? Oops. So stop loss to break even once these highs were cleared. So we didn't get that consolidation and breakout per se, but this level was cleared. Trade was significantly in favor, and it was a fantastic time to move the stop to break even. All right. Now let's go back over here. So yeah, on this post, I just said, on this one, stop to break even here on the break of the high. Okay. And, then I just posted the realized profit once my target or my profit target had been hit. All right. So that is my strategy. Those are breakdowns of actual trades I took, how I actually traded them. We can take a look at one where I got stopped out to break even. Here's another example, like with the recent Euro USD breakdown. Remember, these setups only work 50% of the time. So all I can do is have a good risk reward ratio, repeat our system over and over to be profitable over a series of many trades. So yeah, I always say this stuff because, you can't win all your trades. You're going to lose half the time, especially using a 1 to 2 risk reward ratio. You can minimize those losses by having, moving the stop loss to break even. But you're still going to have, half or more of your trades are going to be either losses or stopped out at break even. So just don't expect to win all the time, but don't let that deter you and cause you to stop following your system's rules. You want your criteria to be there for an entry, okay? And you don't want to mess with your strategy too much, okay? Going off course, breaking your rules, it's not going to go well for you in the long run. So let's check this out. What did I do here? I guess did I not post the actual picture of here it is. Okay. Okay. 1 hour time frame, Bitcoin trade. Here is the actual higher time frame setup on the hourly time frame. So first, I noticed price was under the 200 EMA, had hidden bearish divergence, as you can see, hourly time frame. So we've got our hourly time frame direction under the 200 EMA for shorting. We have our hidden bearish divergence with lower high on price, but a higher high on the RSI. All right. Then on the 15-minute time frame, there's regular bearish divergence. So as you can see, higher highs on price, lower highs on the RSI. Next, the market structure break. All right. So market structure break occurred here. And so that is my post. This was live happening. And then I have an update on the short. So I said, hey, it's a great time to move stops to break even and eliminate risk. Let it ride to your profit target risk-free, or worst case, get stopped out at break even. So this is the update where price significantly went in the favor of the trade, which was actually taken all the way over here. All right. So this one kind of just went sideways for a while, then broke out of that consolidation in the trade's favor. So entry was over here. And this one did get stopped out at break even, but that's completely fine. No money was lost. The consolidation and then the breakout of that consolidation in the trade's favor is when the stop loss should be moved to break even as per my strategy rules. So this one, it doesn't work out. And yes, it would have worked out if you look at the price now, look back at this. It does actually end up going way down, but you can't let that get to you. You just got to keep following your strategy and know that the only way that you're going to be profitable is by following your entry conditions, and using good risk management every single trade. Calculate your position size. Don't risk more than 2% per trade. It's very important. All right. But yeah, here's an example that was stopped out at break even. Let's see if we can actually look. When did this happen? Looks like the 9th, July 10th. Let's see here. Okay. Was this it right here? yeah, so here it is. This is what happened. This was the short right here, taken right here. Stop went to break even right down here. Then it got stopped out at break even. And of course, you know, as you see what happened, price eventually did end up going in the favor of the trade, but you know, it's fine. You can't win them all. And there were other trade opportunities in here with multiple, you know, we had multiple hidden divergences along the way here, as you can see, you know, hidden divergence, we get hidden divergence, all along here, we get lots of hidden divergence. So, you know, there were multiple trading opportunities on this downtrend after that one where you could have gotten good positions. Just like on this uptrend that's been happening, there have been multiple good long trades to be had. So if you didn't win one of them, you know, there were other ones to be won. All right. So hopefully this helped break down my strategy in more detail for anyone who is confused. Good example of a short on euro against the US dollar that I took, good example of a break even trade that I took, and a great example of a long that I took. So thank you guys for watching and have a great day. Remember, this strategy is what I use, have been using for a few years. So it may seem really simple to me, and that's because I've been trading it for so long. It's quite the routine at this point, but you can, you know, modify it and do what you want with it. It doesn't have to be done exactly how I trade it, but just have a set of rules and stick to them. That's all I ask of my followers. Thank you very much. Have a nice day.